name is Vikram Vaidyanathan. I'm a managing director at Matrix Partners India. I lead our fintech investments. We're investors in companies like Razorpay, OneCard, Jupiter, Scapia. All of them are sort of doing launches here today. Very excited to be here, and most of all because I get to introduce Amitabh. Amitabh Chaudhry is the CEO of Axis Bank. He's one of the most thoughtful and interesting bankers who's actually pushed Axis, which is one of the largest banks in India, to become a fintech in the time that he's been here. So excited to have this chat. I'm going to turn it over to Amitabh for opening comments, and then we are going to have a quick fireside chat. Amitabh.
Thank you so much for those comments. I'll keep my remarks as brief as possible. Maybe we can get more out of some question-answer session which we're planning towards the end. So dear guests, delegates, and thought leaders, a very good afternoon. I extend my heartfelt greetings to you, and obviously I'm truly honored to address this gathering, and my gratitude to the organizers to give me an opportunity to come and share my thoughts with you. I'll try to cover very quickly about the critical role of finance in the economy, the role of banks in the financial architecture and the use of technology to improve performance and become valuable partners for fintech startups. I'll also talk about how India is taking leadership position in some of these spaces and what role the banks can play to continue to ensure that we keep that leadership as we move forward. I must start by emphasizing that as financial institutions, we hold a very critical position in aiding economic growth. Our role stretches far beyond the conventional boundaries of financial transactions and balance sheets. It encompasses the very essence of economic growth, stability, and prosperity. So, obviously, we finance the economic growth by financing all the investments in the economy. Our ability to provide businesses with the capital to expand, innovate, and create jobs is obviously integral to the economic activity that directly contributes to the GDP of any nation. Our influence extends not only to the big companies, but to the smaller, medium-scale enterprises, which are obviously a backbone of the economy. We can tailor our solutions, offer guidance, provide access to resources, and empower the SMEs to scale up. And accordingly, if you look at the government data, the MSME sector, the extension of credit by scheduled commercial banks has increased by almost 12.3% to reach 22.6 lakh crores. But as I saw data recently, you will also, it kind of goes to show that if you look at data globally, close to 24% of the people who can open accounts have actually accounts with banks. Somewhere between only 26 to 30% of the people keep their savings in banks. And again, somewhere between 26 to 30% of the people only are able to get a formal credit from a bank. So in spite of the fact that we're supposed to play a very foundational role in terms of supporting the economy, we've still got a long way to go in terms of really supporting every part of the economy which we talk about. In line with India's infrastructural expectations, our role in financing critical infrastructure is also key. Over a period of time, more and more of this burden has come onto the financial institutions because of the long-term financial institutions have either converted into banks or have become bankrupt. We also obviously keep tens and millions of customers happy by keeping their savings secure and productive. We also bank the unbanked and the undeserved, and as I just said, maybe we don't do enough. We do a lot on the mobile banking and the digital wallet side. So there is every element of the economy, wherever finance is involved, wherever payments is involved, the financial institutions have a very important role to play. And as we're talking about digital banking, fintech, digital banking is another area where our contribution has been transformative. If you look at the number of customers today, the digital banking users in the world, I think India is perhaps the highest, just after China. And if you look at some of the data which is coming out, it very clearly indicates that we should cross China also very, very soon. In the realm of international engagement, our expertise in managing cross-border transactions and things around that also comes to play in a very, very big way. India wants to play an important role in the global economy. And again, banks have a very important role to play in the overall scheme of things there too. Let me quickly move on to the role of banks in financial architecture and open banking. In the modern set of banking, banks are not just intermediaries that facilitate the movement of funds, but are also pivotal to the management of risks. and in the stability of the financial ecosystem. And I think that this fact is not that well understood. History shows that cycles of boom and bust were common, occurring nearly every decade or two, and were often caused by a run on a financial firm in the world. To provide a lender of last resort, countries began to establish central banks. And when it was found that some commercial banks were beginning to be a source of instability for the financial system, regulations were put in place to monitor it. And we have a very active, very sound regulator in form of RBI. Why is this so important? Now, as markets and regulators maneuver through the massive shifts being driven by technology, they're likely to gravitate towards a system where the core is strong and trustworthy. And this is very, very important to understand as to why the regulations which are impacting the banking sector and the fintech sector are moving in a particular way. The regulator has to ensure that the core is strong and trustworthy. In the previous session also, we heard about how trust is so important. Given the strong supervision and regulatory standards for banks, they are the most comfortable establishing banks at the core of the system. So the regulators are comfortable with banks being at the core of the system. In India, this is exemplified by digital payments like UPI, or which relies on robust infrastructure and active participation of banks. Most of the pipes are actually provided by the banks themselves. For similar reasons, regulators are also more comfortable with allowing most of the credit risk to eventually reside on balance sheets of regulated entities. And again, second fact, a very important fact to understand. Not only they want the center to be strong, they want the credit risk to lie with regulated entities. This structure means that banks need to be more innovative in order to find opportunities to grow within the established safeguards. It also necessitates open banking, a new era in which banks can engage seamlessly with new partners, which are often fintech firms, by securely sharing customer data via APIs, and you know the rest of the stuff. UPI is, of course, the exemplar of this collaboration and continues to revolutionize the payments landscape. Now, let me try to give you a very different example. An example of step jump in open banking is what we are doing in Axis Bank in the form of a Neo platform. It is our innovative digital banking platform designed to meet the evolving needs of businesses, not individual customers, but businesses in the digital era. It's a comprehensive ecosystem that seamlessly integrates our transaction banking products and deep domain expertise. It also goes beyond traditional services. It is about tailoring solutions, right? So it has account receivable suite. It has a suite where you can pull all kinds of payments which you have to make in the entire ecosystem and do it at one go. You can do bulk payments. You can structure your reports. You can structure the way payments are done. You can structure the way approvals have to be taken, and so on and so forth. At its core is an API developer portal, ensuring secure utilization of our APIs by corporates and the aggregators, which is fintechs, and facilitating efficient information and service exchanges. So here's another example. Today, as we take strong and steady strides in economic stability and advancement, it is with great pride that we recognize that the Indian banking system is at the forefront of global advancement. And when you see around you and the number of people who are here, the kind of ideas they are pushing forward with, it just goes to show how far we have come. Our journey has been one of constant evolution and innovation, and at a price point which just makes it so difficult to compete for anyone else. People cannot believe at the price points at which transactions get done in this country. Just to give you another example, I mean, our mobile banking app is rated 4.8 of the Google Play Store. It is the highest rated mobile banking app amongst all the neo and the global banks in the world. It is possible. I'm just saying that if you put your mind to it, it is possible to actually have applications, apps, products, solutions, which are best in the world. So if you look at even UPI and how fast it has come, and I'm sure you must have seen the speech of Dilip Asbe or some of the data which he has quoted. You look at how UPI started. It started as a peer-to-peer platform, how it moved into peer-to-merchant, now how it is moving into credit on UPI, and so on and so forth. The evolution continues, and it is continuing at a rapid pace, and that's how we believe that we can take transactions from 10 billion a month to maybe 100 billion a month. And it does not stop there. It can go on and on. I believe that the account aggregator system is another huge innovation in the marketplace. It could be the next UPI for the banking industry, where you are literally disintermediating every institution, including the banks, because if you can win customer trust and confidence, today potentially you can get data on the customer, which is more than what a bank might have, even though the bank might believe that they have a primary relationship with the customer. So the account aggregator, obviously, platform is another disruptor. And if you look at the data, there's already in fiscal 23, more than $750 million has been distributed to the AA framework. So we might not realize how quickly it is being adopted, but the pace of adoption of account aggregator is also quite rapid. And if you plot how AA is doing against the UPI, the trends today look quite similar. For example, today already 94 lakh customer accounts have been linked using the account aggregator framework. It's again not a very small number. The compounding benefits of India Stack has, I mean, this has been talked about, I'm sure, on this forum a number of times. It is just amazing. It brings so many things together. It allows you to price things at a price point, which makes it very, very easy and convenient for the customers, and obviously prompts them to use it in whatever shape and form. Who could have imagined that this particular digital stack could potentially be used for you to get into an airport and board a flight without needing a boarding pass? I mean, when you look at Digiyatri, it is actually a derivation of what the India Stack has done. So I would say that not only we have a great India Stack, but the use cases, as we stand today, not all of them have been fleshed out. New ones will emerge, because that same basic data platform can be used for all kinds of services across all kinds of industries in India, and hopefully at some stage in some countries globally also. In all this, growth and innovation is not possible unless there is deep collaboration between banks and fintechs. Banks can't do everything on their own, fintechs cannot do everything on their own. It is very, very important for both the entities to come together and collaborate where it makes sense. Obviously, the collaboration happens where 1 + 1 is more than 2. But collaboration is essential, because I'm sure some banks cannot innovate at the pace the fintechs can do. And at the same time, there are a number of fintechs out there who do not necessarily want to come under the regulatory ambit, or would not even qualify for a regulatory license to do some of the things they might wish to do. So collaboration in those cases makes a lot of sense. For example, everyone has talked about the blockchain technology, which has captured the attention of everyone around the world. How blockchain use cases emerge. Some of them have already emerged, but obviously it requires collaboration between various countries to come together, various central banks to come together. But when it happens, it again will have the same impact as what you're seeing in case of UPI. A lot of the things that you do today, the way we're used to doing them today, will just vanish overnight. And that could be the huge change that could be brought about in a very, very short period of time. In case of India, we are lucky that our regulators have actually proactively taken up some of these new technologies. They have set up, for example, RBI Innovation Hub. One is being, another platform is being launched today. And at the pace at which some of these platforms are being launched is just amazing. I mean, I know in Axis Bank, we're just trying very hard to keep pace with what RBI is trying to implement as platforms, so that the customers ultimately can benefit from all these things coming together. My view is this collaboration, which is emerging rapidly as new regulations come in, as fintechs understand their space in the entire ecosystem, as banks understand their space in the entire ecosystem, this collaboration will only increase, and India will see more and more innovation come through, because the basic foundation has been put in place in the form of the India Stack. India is perhaps the only country where the regulators are involved and driving innovation at the pace at which they are doing it. I'm not aware of any other country where, invariably in most of the countries, the regulators put regulations in place to allow for innovation. Here, you're seeing regulators standing at the forefront of driving regulation. And obviously, if regulators can do that, they can force a lot of players to come into the ecosystem and participate in it, which really helps the ecosystem to evolve much faster. Over and apart from the digital payment infrastructure, technology talent that is now used to work on cutting-edge software and availability of funding, one of the most significant advantages India has today, which we don't realize, is this data. The development of machine learning and artificial intelligence solutions requires significant amount of processing power, but that can be purchased. What cannot be easily accessible is the reams of relevant data that can be used to train AI engines. I've already heard of some fintechs which are actually collecting this data to train the AI engines and bring in the India context to some of these AI frameworks which are available. India's massive population, proliferation of smartphones, and widespread internet connectivity have led to an explosion of data generation. This data reservoir provides fertile ground for training AI models and extracting valuable insight across industries. In midst of this, India's linguistic diversity presents unique opportunities for fintechs to lead in areas such as regional language AI. And I believe that Indian institutions would no longer be just consumers of foreign fintech solutions, but can actively export their innovations worldwide, and that time is not far away. So in conclusion, let me just say that it is imperative to emphasize that partnership between established banks and agile fintechs, startups represents a winning strategy for the future. This collaboration magnifies innovation, elevates customer experiences to unprecedented levels, and unlocks access to previously untapped markets. This synergy isn't just a strategic maneuver, it stands as a testament to the remarkable achievements possible when diverse strengths unite towards a common goal. The narrative of India's financial evolution, we should all understand and appreciate, will be characterized by regulatory foresight, insight, and supervision, where sandboxes will nurture experimentation, open banking will chart new pathways, and financial inclusion will hopefully get to every corner of the country. As we look back at all in the progress which we have made, it is paramount to remember that our journey has just commenced. Regulations in future will not be seen as hurdles, but pathways to success. Banks' deep understanding of complex regulatory environments and risk management dovetails perfectly with fintech startup pioneering spirit. Collaboration creates a bridge where startups receive mentorship, guidance, and support, and that will be essential for fintechs to succeed going forward in the future. I believe that the road to global leadership in fintech and bringing innovative solutions beacons us as a country. I believe it is a path of collective dedication, commitment to ethical innovation, and shared responsibility between banks and fintechs to empower every individual through the transformative power of digitization and technology. Thank you so much. Thank you.
Amitabh, I'm going to let you get a drink of water and catch a breath. It's clear that you're a big proponent of deep partnerships between banks and fintechs, and both can benefit. And we've spoken before about the need to craft win-win partnerships. So two-part question. One, double click on what do you mean? And I'm sure there are a lot of fintech founders who want to walk into Axis Bank and say, how do I craft a win-win partnership? What do you look for? And second, as you evolve these partnerships, what do you look for in that partner?
So there are a couple of things which are very important, which I think both the fintech and the banks need to understand. First is that ultimately it's a three-legged stool, and all three need to balance each other, which is the customer, the fintech, and the bank. Second, it has to be a win-win collaboration where 1 + 1 has to be more than 2, and it cannot be something where someone wins at the cost of the other. Third, customer is paramount, and so the customer proposition, customer journey has to be distinctive. It has to stand out in comparison to what is available in the marketplace. Fourth, I think the fintechs need to understand that, as I was sharing with someone, regulations are not a bug. Regulations are a core part of your operating model. And so compliance to those regulations is extremely important. You can take the guidance of the banks to do it, but ultimately, finally, it has to be an essential part of your strategy and your thought process. It is not a problem you're solving. It is part of how you think and behave. Because if you don't, someday you will get stopped in the tracks and you might not even get time to repivot your model. You will be stopped, period. Now, people obviously try to ensure that somehow they can move around the regulations. My view and my experience is that invariably they catch up with you much faster than what you anticipate. But coming back for this partnership, the last and the most important thing is, we know that the model of fintechs will evolve over a period of time. You might go with a customer proposition, does not work, you'll pivot to something else. What you said 1 year back might not be that relevant today because market has changed, competition has changed, context has changed, regulations have changed. But we do want to see a vision of where you want to get to over a period of time. And that vision has to align to ours in the sense that we're not afraid of you competing with banks, but there has to be a larger vision than just trying to solve a small problem. So we kind of look for these things. We know that all the fintechs we are in partnership with will be competing with us in some part of our business also. We go with our eyes and ears open. We are not afraid of that. But yes, there are parts where it makes so much sense to come together, and that's what we go and tell our fintech partners, that here it makes sense to come together, let's work together. 3, 4, 5 years down the line, we might go different ways, but at least for those 5 years, it works together.
I'll just pick up on one thread around regulation, and we've done this report alongside BCG, and one of the things we advocate is for all fintechs to embrace regulation, because even though they're not regulated, their partner is regulated. And if you don't understand the partner side of this business, you cannot actually scale the partnership at all. I'm just going to move on. We're going to run out of time. I'm going to move on to sort of one of the hot trend lines right now, which is credit on UPI. And you've been very early to that trend line, and you've launched this with partners. So we're going to experience credit lines on UPIs. So there's this promise that you can go from people with, call it between 70 to 100 million people with credit cards and some sort of line to 400 million people. So is this a game changer for you and the ecosystem, or is this just business as usual?
So it can be a game changer. It's very difficult to predict today as to how this will play out. The expectation is that people have got used to UPI, and so a very natural extension of using UPI and doing so many transactions a month, could be take small credit. Now, let's see how this pans out. Obviously, we have to create customer journeys and the ability to underwrite a customer on the fly, which allows us to, give this line of credit. It is important to find ways to how do you go and collect it also, if tomorrow the money does not come on time. See, the problem with banking is the easiest thing you can do is give money out. The most difficult thing to do is to get the money back. So yes, while as a proposition it makes a lot of sense, I think it is still evolving. We still need to see how underwriting will get done. I think it is improving. We have to still see how collections will get done, what kind of customers will be more eligible for something like this, and if they are eligible, do they really need a platform like UPI to take credit, or they have a lot of other options potentially available to take credit at maybe cheaper rates. So rather than getting too excited, right now our focus is, let's ensure that we are standing in the river with the flow and understanding and appreciating how is the water flowing, what is the speed, what are some of the trends, because I do believe a tsunami could come one day, tsunami in a positive way. And then you can't say, okay, now I'll get into the water. Then you have to be standing in the river to take advantage of the tsunami, which will take you further away. So I would say it is evolving, but we are very excited by, firstly, the pace of change. We are very excited by how the regulators are very supportive of this. And we believe that if we can play this right, it can make the difference, and this is where the difference will be between winners and losers. And obviously, we want to belong to the winner category.
At least for me, the opportunity to actually give microcredit to consumers, where it's accepted everywhere, it makes the
absolutely
promise of this supremely exciting.
I completely agree with you, and that's the idea here, right? Unless you are there and unless you are looking at that data and asking yourself the question, how will I give microcredit? You might never do it. You will keep telling yourself, how can I give microcredit? There's not enough data. And that's why I'm saying standing in the river is very important. You stand there because there's no point in creating a technology element where you can give credit on UPI and then don't do it.